Welcome, everybody who is listening from your phone or laptop or wherever in the world you happen to be. During these lives, we have been talking with our lovely cryptocurrency expert, Conrad. But this week, since we have some new developments in our real estate, we thought it would be best to speak to the company expert. Welcome, Rory.
Hey,
Can you go over your role at Acre briefly
how's it
for all
going
of the
there?
listeners? It's going very well.
Nice, glad to hear.
Can you go over your role at Acre briefly? How are you involved with our projects?
Sure. So I'm the senior real estate acquisition specialist, which pretty much entails overseeing any acquisitions as well as dispositions from the real estate side. So it's pretty much communicating with agents, contractors, wholesalers, various real estate professionals as we grow our portfolio.
Very cool. And our portfolio is always growing, especially recently, because the market conditions have been picking up in our favor. Isn't that right?
Yeah, definitely. So we're seeing some good trends coming out of, the COVID pandemic. It's an unfortunate situation, but we've been able to, make the necessary changes and pivots to kind of capitalize on some of the emerging trends we're seeing in the market.
What kinds of trends are those?
Well, one key thing that came up just throughout the pandemic was a migration pattern. So we're noticing individuals moving from northeastern states like New Jersey, New York, Massachusetts, as well as states like California. They're actually moving down south to states like Texas, Tennessee, Georgia, and Florida. So for a few different reasons, the pandemic restrictions, for one, is a lot more lenient down south. So that was one reason, businesses are starting to move down just to kind of, reopen and get some more, business interactions going. The other big thing was the new environment for work from home individuals. So now we're finding that, the price per square feet down south is a lot cheaper than in the Northeast or California. So individuals are now able to work from home remotely on a full-time basis. So they're moving down south to get some more space, a backyard, a larger property that they can work from instead of being, cooped up in an apartment or a condo in the Northeast. So that's also another factor that's playing into those migration patterns. The weather is also playing a big impact, especially for those retirees, the older folks. They want to get some more sunshine and get a nice tan. So the good thing about what we're doing is we've been focusing heavily on, states like Georgia and Florida for the past few years, building those relationships. So we have a few resources in those markets already. So we're able to kind of capitalize on that influx of residents moving from out of state.
Very cool. And the market as a whole, definitely since the company has been on pause because of the start of COVID-19, real estate has been all over the place, and new constructions have been down, and prices have been going up because of that. How are the trends looking for that going forward?
Yeah, so one thing that came up that was pretty interesting, because of the pandemic, there was a huge, shortage of labor. So, a lot of these factories, lumber mills, they had to cut back on their workforce. So that caused a lot of the raw materials used in construction to skyrocket, like lumber, steel, a few different items. So what's happened is because of these increases in construction costs, a number of builders have decided to kind of put a pause on some projects. So that resulted in fewer homes being brought to market. So there was still that demand for, single family homes, for example, but builders weren't building at the same rate just because of this increase in construction costs. So what's happened is the market kind of spiked and started increasing pretty aggressively, especially in those southern regions we mentioned. Just because now there's so many people looking for properties to live in and to reside in or rent, and there's just not enough on the market. So prices went up. The basic law of supply and demand, when there is low supply and high demand, prices eventually have to start increasing. There is one thing that kind of came out, some data that was published by Realtor.com. So for the month of June, new listings actually increased close to 11% compared to prior month.
That's
May.
A lot.
So now we're seeing, it's a pretty significant jump, and it's, one of the driving factors is, it's summer, so you do find that there are more properties being bought and sold in the summer period. But there's also now, homeowners who are now starting to notice the increase in value in their homes. So they're looking to now list and maybe capitalize on that appreciation and maybe move to another market, or maybe even rent for a few months or years just until the prices kind of stabilize.
Okay. So you expect that to lead to potentially an increase in rents as well?
Correct. So we've already started seeing some, the rents start to go up in certain markets. Some markets have appreciated, some have depreciated. The southern states, as we mentioned before, those have been increasing steadily. But now when you're comparing to, say, New York or Boston, those rents have been somewhat a bit more stagnant, and in some cases actually went down, just because now, as I mentioned, with that migration pattern, you're finding less tenants in those areas that are willing to rent for those prices, when you could just move to another state, get something a lot more affordable with more space. So it's an interesting dynamic where some markets are seeing a sharp increase in monthly rents, while others are starting to see some corrections there.
And probably with the price of real estate going up significantly in the past year, it's also pushing a lot of people out of home ownership in general. So people will be renting for longer. Have you seen any articles? We didn't discuss this before, but I've been seeing a lot of news with other real estate developers or companies that invest, like BlackRock, moving in and buying a lot of properties now, taking them basically off the market for home ownership and trying to create this class of perpetual renters by pushing up the prices. Have you seen that?
Yeah, definitely. And it's a good thing that you mentioned BlackRock. They're a huge investment firm that basically focuses on that exact idea. They're kind of drilled into the idea of owning a large portfolio of single family properties and even a few multifamily. But they focus mainly on that concept of having residential rental properties. So they're holding these assets, renting them out to different individuals. And it does play a huge impact on, affordability, for example, because now homeowners aren't able to compete with some of these larger hedge funds who are coming in paying a premium for these assets. So it's leading to, housing not being affordable, which was already an existing issue that's now being amplified. So it's creating a lot of havoc there. I've heard some talks about possible regulations that are being considered. But for now, it's pretty much an open market in that sense. And, BlackRock's one example, but there are also other hedge funds, out of New York, Boston, even, California, where they're going into these markets, purchasing these homes and renting them out to individuals. And developers have also caught on to this trend. So you find a few of the national builders, they're actually building these communities and subdivisions with the sole purpose of actually selling the units to these hedge funds for them to turn around.
Oh, well, they already know.
So it's not exactly. Yeah. So they have that agreement already in place with, a hedge fund where they're going in, building these houses, and they already have them on the back end to purchase them when they're complete. So it's, there's certain cases where there's no that migration from the more traditional building process where, houses are built and sold to homeowners. It's now houses are being built and sold to these hedge funds who in turn rent to these individuals.
Wow. Have you found that to be the case for the properties that we have been acquiring recently? Has there been more competition from those kinds of parties?
Yeah, definitely. So we've definitely seen some interest from out-of-state investors. You know, when we speak with our agents who are in the respective markets, they do have, you know, a lot more calls and a lot more clients who are working for companies or even just, you know, individuals who are investors from out of state who are trying to capitalize on the cash flow in some of these specific markets. So yeah, so there's definitely that interest coming in. It's a lot more competitive. You know, the returns that real estate's been producing over the years, especially with this recent price swing where prices have appreciated at a pretty fast clip, it tends to attract a lot of different investors into the space. So we've definitely noticed an increase in competition there.
But what kind of process have we been using to kind of stay ahead of that competition? Is it the geographical focus onto the areas where places like BlackRock can't outbid us, or focusing on specific kinds of properties? What has been our, I guess, advantage?
Yeah, so it's pretty much focusing on the individuals who are involved in the process, right? So real estate is a very relationship-based business. So while, you know, we won't be able to outbid a company like BlackRock or a larger hedge fund, but we come up with different ways to source properties that fits a specific criteria for us before they even hit the market. So, you know, trying to get those properties from, you know, communicating directly with the homeowners, working with wholesalers who are basically intermediaries in the real estate market. You know, having those existing relationships enables us to be able to still find deals and not necessarily end up in a bidding war with another out-of-state investor, another, you know, hedge fund or a larger entity. So while it's not perfect because, you know, everyone's kind of, you know, fishing in the same pond, it does help to have those relationships in place where we're leaning on people who have that expertise in that specific market to help provide some of those deals.
For sure, yeah. And you, as you're out there making these relationships, reading the tea leaves, what do you personally see as the trends moving forward? Like, what do you think we can expect from real estate, like, moving forward in this year?
Yes, I'm very bullish on the residential market, especially the single family rentals, even multifamilies as well. I think they're always. Yeah, sorry, can you hear me?
Yeah, Sarah? You cut out for a second, but you're back.
Yeah, no problem. So yeah, I'm very bullish on the single family residential as well as multifamily residential space. There will always be that demand for housing as things kind of progress. We're expecting prices to continue to go up just until supply can kind of catch up with the demand. So yeah, we definitely love the residential space. Commercial is a bit uncertain right now. We're seeing some demographic shifts, especially from that work from home concept that's now being even more popular. You know, some offices will reopen, but we've started noticing, you know, employers who are now opting to not renew leases, you know, or try to renegotiate their leases to get their rents down. So this will have an impact on the value of commercial real estate because now, you know, investors and property owners in the commercial space, they're no longer, you know, getting that same return that they're expecting every month from the rents that they're collecting. So that will have a subsequent impact on the price and their ability to sell those assets. A few commercial developers have decided to shift gears and kind of convert commercial buildings into other asset classes like, you know, warehousing or self-storage.
Okay.
As well as some who are converting them to residential spaces, like, you know, building out lofts and condos. So it's so far, you know, one space that we're definitely going to be sticking in and focusing on is the residential space. So yeah, so that's really what we're going to be focusing going forward.
And you mentioned something interesting that companies are going to like release their leases on office space because they're moving more towards work from home. Is that also going to impact the shift in where people live and how free they are to move and where they will choose to move in the future, do you think?
Yeah, I definitely think it will play a factor. A lot of these markets that historically have been, very big employment hubs, like New York or California, where you have these large cities with a ton of jobs. Now those jobs seem to be, kind of being reallocated into other states as well, where the cost of business might be a bit lower. So on one side, you do have individuals who can now work from home, but you're also finding that even companies are starting to take notice of that difference in, price per square footage or office lease rates, where they're now reallocating to other states as well. Texas is a really good example of that. A number of employers have started, shifting resources and moving offices down to Texas just to kind of get some of the tax advantages and the lower cost of doing business. So yeah, there's definitely going to be a lot of changes coming up, changes that have already occurred and changes that will be occurring for later this year.
Mm-hmm. And because of the pandemic's influence on all of this, you think that, do you think any of this would have happened without the crazy pandemic year that we've had? Were these trends already taking place, or is this just something very, very new for everybody?
Yeah, it's pretty tough to say if it would have still happened. I think personally, yes, it would have, but I think the pandemic tried actually help to expedite that process, right? So, the technology, just Zoom in general, having the software and that platform as a medium to have conversations and to work on projects amongst team members, being forced into that situation where we had to adapt, that helped things to definitely move a lot quicker than they typically would have. So, companies have had to respond to that. Individuals are responding to that as well as it relates to where they choose to live. So yeah, I think it would have still happened, but just the pandemic just caused it to happen at a lot faster rate.
Mm-hmm. Yeah, and kind of related to that, you kind of mentioned this in the beginning, but just in case people weren't here, and just to, I guess, say it more explicitly. Could you speak again to your role at Acre and the company and your personal goals for our real estate holdings right now and in the future? Like what areas we'll be focusing? You mentioned residential, but more geographically as well, or any other more specifics? Last week, we announced that we have acquired some new real estate, but we didn't really go into any specifics. And that's why I wanted to talk to you this week, because you're really the company expert on all of this. So would you be able to just introduce yourself a little bit to the audience and speak to those specifics right now?
Yeah, sure. Just to recap, so again, my name is Rory De Silva. I'm a senior real estate acquisition specialist for the company. So I oversee the acquisitions and dispositions of our real estate assets. Currently, we're in a few different markets, a few ones that we typically focus on. We have Atlanta, Georgia, the Miami and Fort Lauderdale area in South Florida. We do hold properties in other states as well, like Springfield, Ohio, Baltimore, Maryland, Salisbury, Maryland. Those are just a few of the markets that we're in. And our goal when we're trying to decide on a market to enter is really, cash flow is really one of the key factors. What's the price of that property relative to what it's going to be able to rent for on a monthly basis? So we're trying to find those states or those cities where housing is affordable, the rents are sustainable. There is opportunity for price appreciation over time. But having that consistent, stable cash flow is something that's, one of those key criteria for us when we're evaluating any real estate markets or deals for that matter.
Mm-hmm. Especially if we have the obligation to our investors to give them the consistent cash flow as well.
Correct. Yeah. So it helps out a lot with providing those stable returns to our investors and users. It really, cash flow, in my opinion, is a lot more stable than, relying on price appreciation from, say, a fix and flip or any of those different investment strategies. So our primary goal is focusing on rentals and that cash flow aspect.
Mm-hmm. Is that it? That seems to be a unique selling point of our company. As such a unique blend of real estate and cryptocurrency, and fractional ownership of all of our investors. What else do you think is unique about the way that we have to address or acquire real estate? Is there anything else besides the focus on cash flow that you could think of?
Yeah, well, the focus on cash flow is one. For us to be unique, as I mentioned, in this market being so competitive, I think one thing that we have to really be mindful of is, again, the relationships that we have in place. That's always going to be, I guess, like the number one priority is just being able to have the necessary partnerships in these markets that can provide stable, solid deals where we can meet that investment criteria. So yeah, something that's unique, I guess, about us is just the relationships we have in these markets that enables us to add to our portfolio and continue to grow the company.
Mm-hmm. Yeah, and we've been present in those markets for a while already, right? Since the start of the company, really.
Yeah.
Do you think that was before this trend? Or was the trend already in place when we started investing in those areas?
Correct. So once we started going into these markets and these areas, the goal was always cash flow. Mm-hmm. It was always finding those affordable markets where properties would rent for, at a rate that provides the yield that we require. So the goal was always cash flow, always finding good investment opportunities in those markets. But what we've been able to develop over time is to strengthen the relationships and, fine tune our investment criteria to know what we qualify as a good deal and what's, something that would disregard or not invest in.
All right. Well, I think that was a very great conversation and a great look into our current real estate plans and our outlook into the future. So thank you very much. I think next week we want to go back and speak about cryptocurrency a little bit more because there's always so many different updates and news happening all the time. So many changes.
Yeah.
But I hope to have you on in the future to enlighten us more about the state of U.S. real estate and how it impacts our company.
Yeah, for sure. I definitely enjoy sharing. So anytime we have other news updates and anything that's going on in the market, I can always bring that up on our follow-up calls.
Perfect. And thanks everybody for listening. We're going to end it there. Join us. We will be having these lives every week at 1 or 2 p.m. Look at our social media to schedule it or to see any updated times. Thanks so much for listening and hope to see you guys again soon.
All right. Thanks, guys.
Have a great day, everyone.